Welcome to Invest Giant. Learn, invest, build your net worth. Today we're diving into the top 4 small cap stocks you need to know about for 2024. These are the companies you want to get in on before it's too late, because trust me, you're going to be kicking yourself in a few years if you don't get in early on these. Now remember, I'm not a financial advisor, this isn't financial advice, and this is just for entertainment purposes only. Small cap stocks, as you know, are those with a market capitalization between $300 million and $2 billion. They often get overlooked because they're not the big flashy names everyone's talking about, but that's where the opportunity lies. These companies have huge growth potential, and if you can spot them early, the gains can be absolutely insane. We're going to break down each company, look at what they do, why they're poised for growth, and most importantly, why I think they're a smart buy right now. So buckle up, grab your notepad, and let's get into it. First up, we have BrightSpring Health Services trading under the ticker symbol BTSG. Now, if you're not familiar with BrightSpring, they're a leading provider of home-based health services primarily serving individuals with disabilities and complex needs. Think of it like this. The demand for home-based healthcare is exploding right now, and it's only going to get bigger as the population ages. People are living longer, and that means a greater need for specialized care, often in a home setting. BrightSpring is perfectly positioned to capitalize on this trend. They've got a massive network of over 300,000 caregivers and operate in over 40 states, giving them a huge footprint in this rapidly growing market. But here's what really gets me excited about BTSG, their commitment to technology. They're not just providing traditional home care, they're leveraging technology to improve patient outcomes and streamline operations. Think telehealth platforms, remote monitoring, and data analytics to personalize care plans. This tech-forward approach is what sets them apart from the competition and makes them a true disruptor in the healthcare space. Now let's talk numbers. BTSG currently has a market cap of around $1.5 billion, putting it squarely in small cap territory. Their revenue has been growing steadily, and they're profitable, which is always a good sign. But the real kicker is their future potential. Analysts are projecting some serious growth for BrightSpring in the coming years, with some estimates putting their annual revenue growth in the double digits. That kind of growth potential is hard to ignore, especially in a sector like healthcare that's only becoming more essential. Of course, like any investment, there are risks. The healthcare industry is heavily regulated, and any changes in government policy could impact BrightSpring's business. But overall, I see BTSG as a solid long-term play with massive upside potential. If you're looking for a way to tap into the booming healthcare market, BTSG is definitely one to keep on your radar. Next up, we're switching gears and diving into the world of infrastructure with Parsons Corporation, trading under the ticker symbol PSN. Now, Parsons might not be a household name like some of the tech giants, but they're a powerhouse in the engineering and construction industry, and they're about to get a whole lot bigger. Here's why. Infrastructure is hot right now, with governments around the world pouring trillions of dollars into infrastructure projects. Companies like Parsons are in the sweet spot to benefit. Think roads, bridges, airports, water systems. Parsons does it all, and they do it on a massive scale. But what really sets Parsons apart is their focus on technology and innovation. They're not just building structures, they're building smart infrastructure. We're talking about things like intelligent transportation systems that use data to optimize traffic flow, smart grids that improve energy efficiency, and cybersecurity solutions that protect critical infrastructure from attacks. This focus on cutting-edge tech gives Parsons a significant competitive advantage and positions them as a leader in the rapidly evolving infrastructure landscape. And speaking of leadership, let's talk about their track record. Parsons has a long history of winning major government contracts, and that's not changing anytime soon. They've got a proven ability to deliver complex projects on time and on budget, which is exactly what governments are looking for. Now let's talk financials. Parsons has a market cap of around $5 billion, putting it on the larger end of the small cap spectrum. They've got a strong balance sheet, consistent revenue growth, and a healthy backlog of projects, which gives me confidence in their long-term prospects. Of course, no investment is without risk. The construction industry is cyclical, and economic downturns could impact Parsons' business. But with the global focus on infrastructure spending, I believe Parsons is well positioned to weather any storms and continue its growth trajectory. If you're looking for a way to invest in the infrastructure boom, PSN is definitely worth considering. Chapter 3. Now, for all you risk takers out there, this next one's for you. We're diving into the world of biotech with Immunovant, trading under the ticker symbol IMVT. Now, biotech can be a roller coaster, but the potential rewards are massive, and Immunovant has the potential to be a game changer. Here's why I'm excited about them. Immunovant is focused on developing treatments for autoimmune diseases, which are conditions where the body's immune system mistakenly attacks healthy cells. These diseases affect millions of people worldwide, and there's a huge unmet need for effective treatments. Immunovant's lead drug candidate is targeting a protein called FcRn, which plays a key role in regulating the immune system. By blocking FcRn, they believe they can effectively treat a wide range of autoimmune diseases, from myasthenia gravis to Graves' disease. And the best part? Their early clinical trial results have been incredibly promising. We're talking about significant reductions in disease activity and improvements in patient outcomes. These results have gotten the attention of the entire biotech industry, and for good reason. If Immunovant's drug continues to show success in clinical trials, it has the potential to be a blockbuster treatment, generating billions of dollars in revenue. Now let's talk about the risks. Biotech investing is inherently risky. Developing new drugs is expensive and time-consuming, and there's always the chance that a drug will fail in clinical trials. Immunovant is still in the early stages of development, and it'll be a few years before we know for sure whether their drug will make it to market. But here's the thing. Even with the risks, the potential rewards are just too big to ignore. Immunovant has a market cap of around $2 billion, which is relatively small for a biotech company with such promising drug candidates. If their drug is successful, we could see their valuation skyrocket. Of course, this is a high-risk, high-reward investment. It's not for the faint of heart. But if you're willing to stomach some volatility and believe in the potential of Immunovant's technology, this could be a home run investment. Chapter 4. Finally, we're wrapping things up with a company that's at the forefront of a technological revolution, Enovix Corporation, trading under the ticker symbol NVX. Now, you might not have heard of Enovix yet, but you will soon, because they're on track to disrupt the entire battery industry. Here's the deal. Batteries are everywhere. They power our phones, our laptops, our electric cars, and pretty much everything else in our increasingly digital world. But traditional lithium-ion batteries have limitations. They're bulky, they don't hold a charge for as long as we'd like, and they can even be a safety hazard. Enovix is changing all of that with their revolutionary three-dimensional silicon lithium-ion battery technology. Their batteries are smaller, lighter, and more energy-dense than traditional batteries, meaning they can store more energy in the same amount of space. This breakthrough has the potential to revolutionize everything from consumer electronics to electric vehicles to renewable energy storage. Imagine a world with smartphones that last for days on a single charge, electric cars with dramatically increased range, and homes powered by solar panels that can store enough energy to last through the night. That's the future that Enovix is building, and it's a future that's closer than you might think. Now let's talk about why Enovix is a compelling investment. First, the demand for better batteries is only going to increase. The global battery market is projected to grow exponentially in the coming years, and Enovix is perfectly positioned to capitalize on this growth. Second, they've got the technology to back it up. Their three-dimensional silicon lithium-ion batteries have already demonstrated significant performance advantages over traditional batteries, and they're continuing to innovate and improve their technology. Third, they're attracting major partnerships. Enovix has secured partnerships with some of the biggest names in the tech and automotive industries, including Cypress Semiconductor and a leading electric vehicle manufacturer that they can't even disclose yet. These partnerships are a strong vote of confidence in Enovix's technology and their ability to deliver on their promises. Of course, there are risks to consider. Enovix is still in the early stages of commercialization, and ramping up production to meet the expected demand will be a challenge. Competition in the battery industry is fierce, and there's no guarantee that Enovix will be the ultimate winner. But with their groundbreaking technology, strong partnerships, and massive market opportunity, I believe Enovix has the potential to be a multi-bagger investment. If you're looking for a way to invest in the future of energy storage, NVX is a name you need to know. So there you have it, my top 4 small-cap stock picks for 2024. These companies are all operating in massive growing markets. They're led by experienced management teams, and most importantly, They're developing innovative solutions to real-world problems. Remember, investing in small-cap stocks can be volatile, but it also offers the potential for huge returns. As always, do your own research, understand the risks, and only invest what you can afford to lose. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit the notification bell so you don't miss any of our future updates. Happy investing!